Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. Before we begin, we want to take the time to kind of review how the market was here in 2011. And when we look at the world markets, we can see the Dow Jones is up 5.1%. However, the S&P 500 and NASDAQ were both down for the year. The FTSE down 6%. The DAX down 2%. France, the CAC down 19%. The Nikkei, Japan down 17%. China, Shanghai down 19%. So overall, for the most part, we see that all of the world markets were down for 2011, some more than others. When we look at the currencies, we can see that the dollar is up, the euro was up, the pound was up, the yen was down, and the franc was up, and gold was up 10%. So it looks like the euro was the strongest for 2011. And you think about some of the key events. Of course, we had the Mideast turmoil from the spring to the end of the year. We also had, let's not forget, in March we had the tsunami in Japan, and we had, for the whole year, all of the different currency markets discussing their monetary policy. Here in the States, we had the end of quantitative easing. Of course, at the end of the year, the stability of the euro being called into question, and they had the European summit there, and the status of the pigs, Portugal, Italy, Greece, and Spain, and even other stable countries in the Eurozone, Greece and France, and the British being called into question. So it's going to be real interesting to see what's going to be our catalyst here in 2012. But 2011, for the most part, was flat to down for the world markets, and the currencies, for the most part, were flat to just a little bit up. Let's take a look at some of those gold and a dollar before we take a look at our currency pairs. Okay, so now we're going to look at some of our market sentiment leaders to see how they're helping us gauge the market, starting off with the dollar. When we look at the dollar, I mean, we can see we kind of, and I know I have a very zoomed out look here because I wanted you to see where I'm grabbing this from as far as this resistance line. But we can see that the market over the past week here really shot up here, and of course, with the instability of the euro, the FOMC even though they kept their rate unchanged, they had some positive commentary about the economy with moderate growth, and so we really got that big move here for our Monday and Tuesday, and then we hit again that resistance level that we pulled off from way back. Now we pulled off back just a little bit. Now we can see on our market profile that if we get below 80.50, right around 80.50, I mean, it's really possible for us to come all the way back down to 79. Which will be should hold up as support, as that's our price level from before. So again, we need to watch 80.50 to see if we'll begin to start to fall right out of there. But overall, I mean, again, very strong dollar. Dollar very strong. We'll see what happens from here. So if we have a strong dollar, let's take a look at gold. And just looking at this visually, we can see one very key important thing. When's the last time gold was below the 200 moving average? Not sure when the last time it is, but we do know that it is right now. We also could make an argument for an M pattern. We're certainly putting a lower high here, putting a lower high here. And once we finally broke through 1600, we really started to test some things out here. Now we've got this wick here, down here at 1534. That's something to watch. And of course, this swing low here is all the way down at 1485. So those are some price levels to watch. And of course, where we are right now, if we can get above these wicks, and more importantly, 200 moving average, we may get ourselves back into this range. But right now, it is very important to see that we actually did close below the 200 moving average for gold. At some point, gold is definitely going to be buyable. Finishing off with crude oil, we've been talking about this range of 102 down to 96 for a while. And then what's important about what happened right now is you see we closed below 96. So now we have to start watching 90. If we get below Friday's low, we have to start looking at the fact that it may go back down and retest 90. As we come to our watch list, we're going to start off with our low volatility watch list, which is our 1 hour time frame using Bollinger Bands. Basically, we're looking for that squeeze of the bands. We're looking for consolidation in the price action on that 1 hour time frame. And the one pair that we're watching is the pound yen. Now, it hasn't set up completely. There has been a little movement. But for the most part, we are seeing that consolidation. And we do want to see which way this is going to break. Our inside bar watch list is looking for the range of the day and comparing it to the previous day. In this case, comparing Friday to Thursday. And at the current time, we don't have any candidates for the inside bar watch list. As we move to our education spotlight, we've been talking about, and it's a great way to end our 2011 year with trading journals, and that we have to understand that when you're in trading, you pay for the potential lessons that the market provides us each and every day. And if we don't take advantage of those lessons and those opportunities that the market teaches us each day, then you're not capitalizing on the value of your education. Remember, there is no such thing as a losing trade. It is the cost of doing business. It is your trader's tuition. And if you don't take the time to learn for what the market is telling you about whether or not that setup works, about whether or not the market gets to change, then you're not getting your tuition back. You're not getting the value of your tuition. And the way we do that is by using a trading journal. We review, we keep track, we document, and that therefore we're getting our money's worth as we pay the market both on winning and losing trades. Again, take the time to like us, comment, subscribe. We got some great things planned for 2012. You can find us on Facebook as a page, or Are You Financially Literate? And of course, moveupwithmike on Twitter and YouTube. We have our same resources. Again, we believe that the key to becoming a successful trader is developing a trader's mindset. So we have our free video course and our coaching program, again, helping you develop a personalized trading plan, taking you to another level so that you can consistently trade day in, day out. If you're going to trade Forex, why not get paid to trade? Rebate trades for your Forex. Doesn't change your conditions of the spread. Just, again, rebates for your trades. And finally, we have automated signals for if you're looking for that. Again, of course, you want to make sure it's a signal, the structure, the system matches who you are as a trader. Get the signals and trade it for yourself, or have the account automatically traded. In the end, it continues to be the same. If it's not the system, it's not the indicator, it's your trader's mindset. If you want the ability to pull the trade every time, you've got to build that psychological capital. You have to develop your trader's mindset so you can be a consistent and profitable trader. Happy New Year, God bless, and I'll see you guys in 2012. Thanks, guys. Happy New Year.